This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
You're with us on CNBC-TV18. This is Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio. This is a Thursday morning. I'm Sonia, and with me, as always, Nigel and Surbi. Well, things are not looking that great, folks. I mean, a profit-taking mode across the world, which I don't think is coming as a surprise to anyone, given the kind of rally that we've seen. But today looks like it's not going to be such a great morning.
But it's a beautiful morning, Sonia, here in Mumbai. It's a little more chilly. Yeah. You know, it's for Mumbai weather, I think it's quite pleasant as well. The markets, well, we'll take it in our stride, right? We did a little bit of excess maybe on the upside. Yeah. So maybe, evening out things. But let's see how this goes.
With our colors today, shades of pink and purple, I think we're trying to cheer up the market today. So,
I hope it works.
Doing a little bit. I hope it works. But yeah, as you said, cues are not all that supportive, even overnight.
Absolutely. I mean, the global setup is not looking good. So let's get straight to that, right? The markets across the board are in profit-taking mode. But as I said, some bit of money being taken off the table wouldn't harm anyone, given the kind of rally that we've already seen. But the big question is this the start of a downtrend? It's too soon to tell that. But for now, there were steep losses overnight, in the US markets. The Nasdaq, in fact, was down for the fourth straight trading session. There is now uncertainty on when the Fed will go ahead and cut rates. So on that timeline, a little bit of uncertainty, especially after what came through in the Fed minutes. There is a lot of economic data that's expected. So in that context, perhaps you could get more clarity on the rate cutting cycle. There's the private payroll report that's due later in the US. So keep an eye out on that. For our own markets, it looks like the rally is in pause mode because in the last 5 days, if you map the trajectory, the Nifty is down about 1%. It still pales in comparison to the rise we've seen in the last many days. But there's been selling. So both foreign and domestic investors sold in the cash markets yesterday. FI sold about 700 crores. DI sold 860 crores. But two things to keep a keen eye on. One is the Nasdaq and the other is the US bond yields. Now, any signs of major correction over there will perhaps lead to a snowball effect in our own market. So on the Nasdaq, as I said, fourth day of a fall, and on the US bond yields, they've rebounded back to almost 4%. So just keep an eye out on these two internals and how they move from here. Earnings season also begins next week, so a lot of cues coming in there. This morning, you even have, Bajaj Finance that reported a very good set of numbers. The business update was good. So a lot of specific stocks in focus, but otherwise, it looks like it's going to be a slightly tricky morning, as has been the case for the last couple of days.
Oh, yeah, absolutely. I think it's going to be more about individual stocks today. And we saw that yesterday as well. I mean, the mid-caps managed to keep their head above water. But for the broader market, I mean, the larger, big indices, I think there are still a lot of questions out there. Yeah. And, a lot of that played out overnight in US market action as well. It's all about second-guessing the Fed now. And, that's the way of the market, because suddenly the market is really fretting over whether it'll get so many hikes or not. We ended December with the US market believing that we'll probably get 6 rate hikes. Now, a lot of people today are waking up and saying maybe some of those expectations were just excessive, and therefore the market has to dial back, and that's what seems to be going on. Yesterday, the US 10-year yield crossed the 4% handle intraday. So the bounce back from the recent lows is also very, very sharp. Then it cooled off. It is below the 4% mark right now. But that's simply telling us about the uncertainty that is lingering in the market. It's all about second-guessing the Fed. The dollar also remains pretty buoyant and elevated. 102.5 on the dollar index last I checked. And we saw the way that played out for a lot of, the global-facing sectors, particularly metals, the cool-off that started trickling in over there. So need to watch for the dollar. Now, what cues or clues did we get yesterday? We had the FOMC minutes out, and the FOMC minutes are saying that, yes, a lot of good work is being done, but you can't take your foot off the pedal. In fact, the minutes went on to say that policy should remain restrictive. While rate cuts are very much on the cards, but policy should remain restrictive till inflation cools. And then you had one of the Fed voting members speak yesterday. This is the Richmond Federal Reserve President, Thomas Barkin. And he said that, yes, there's progress being made, but you can't let your guard down. And, he went on to say that rate hikes are still on the table if inflation does not cool off in a very sustained fashion. So some of this commentary got the market a little nervous, and it really played up. By the way, crude did a bit of a jig last night as well. It was up about 3% in overnight action, about 78, 79 again on Brent. There are supply disruptions in Libya. Some protests have broken out. Some fields have shut down over there. And the Red Sea issue continues. More talks about, some possible attacks on ships, etc. So crude is a watch point. For the Nifty, we are not able to hold on to lows, and that's the issue with the market. And we're actually seeing a sell on every small bounce. So the nature of the market has changed in the last 1 or 2 trading sessions. But I mean, it could turn on a dime again. Nothing is forever. But for the timing, the market is not a buy on dips. It's become a bit of a sell on rally market. And there's lack of any strong support. The 2 big pillars of the market are not working, neither IT nor banks. Can that change today? Can these sectors start offering some sort of a ground, some sort of a floor? In terms of levels, I'll look out for the lows because, we've been breaking lows on a daily basis. So 21,500 was the lowest point the Nifty hit yesterday. The 20 DMA is coming in around 21,300. So now let's see how things go from here on. But I guess it's going to be a little shaky, at least to start with, Nigel.
Well, I think the key aspect here is the overbought sentiment becoming more moderate. We were just running along on a day-to-day basis. The Nifty was just moving up. Mid-caps were flying away. So I think that's getting a little bit moderated, which isn't such a bad thing. It could be a healthy thing in the time to come. Now, overnight, you have this uncertainty on the quantum and the timing of the rate cuts. So that's a bit of an issue, and that's what could keep global equities a little bit subdued. The onus for me is going to be on the Nifty Bank. Even yesterday, the Nifty Bank actually was a relative outperformer. You'll have IT and metals that will be reacting to the US bond yields, the timing of the rate cuts as well. So the onus is on the Nifty Bank to come in there and bat for the bulls. The mid-caps, yes, they've outperformed, but the sustenance of this kind of a performance is something that I'll be looking at because you can't have the headline index see, too much of weakness and mid-caps continue to outperform. Though there are pockets of the market that are looking quite frothy, there's another part of the mid-cap space that's still looking pretty attractive and they have a good theme playing out for them. So be very selective from the mid-cap space. Last few sessions, if you just look at it, Nifty is making lower lows, which is sometimes a bit of a worrying aspect. And the FIs from being very aggressively net long, now in fact they're adding some short positions. Closer around 7,000 short contracts is what they added yesterday. And that's why the short positioning from around 30%, it's moved to around 34% approximately. And the net long positioning as well. I recall a few sessions ago, it was at around 80,000 odd. And we were mentioning you don't want that number to run away to around 100,000. Now the net long positioning has come down from around 85,000 contracts to around 70,000 contracts. Mind you, this is good. You don't want the markets to get lopsided on one side with the long positioning moving to that 90,000 or 100,000 odd. So some shots in the system, actually it could be a blessing in disguise. The PCR normally we have seen, it bottoms out at around 0.65 to around 0.7. Now it's come down from around that 1.2 odd mark to around 0.76. If today you see aggressive call writing, we could get to that sub 0.7, which if that's the case, intraday, the market becomes a bit of a buy on dip market, just on an intraday basis. Because when the PCR does an excessive move towards 0.65, 0.7, history tells us that yes, we do see a bit of a bounce. And why did the PCR come down? Because you had aggressive call writing, 21,600 call, 21,550 call. Between them, they added closer on 2 crore shares, which brings us to the levels. The recent high is 21,834. So on the upside, going by the options data, 21,700 call as well was fairly active. 21,750, 21,800. That's a crucial resistance zone. On the downside, since the 21,500 put has the highest open interest on the put side, the premiums 50 rupees are there. That's the near-term support, 21,450. If that breaks, then you're looking at the 20 DMA. So that should be the important mark for today's trading session, 21,450. The Nifty Bank yesterday it went ahead and it broke that 20 DMA on an intraday basis. But by the time we ended up, it actually conquered that. So the Nifty Bank, the onus is on it. If the banks are going to be delivering very good earnings growth, we've seen more than 1,000-point correction from the recent peak. That's a 2.5% correction on the Nifty Bank. And maybe IT and metals could be under some pressure. So the onus is on the Nifty Bank to bat for the bulls. I think intraday, if you see a bit of an intraday dip just for the day, that could provide a trading opportunity on the upside.
Okay, well, lots of individual stocks in focus because of their updates as well, right? I think Bajaj Finance could be one of the stocks of the day. The AUM has actually crossed 3 lakh crores for the first time ever and very strong growth of almost 35%. More on that later, but in the meantime, let's also get you through to some opinion this morning. Vikas Jain of CLSA says that the Indian equities have started 2024 at near record valuations versus debt. Extreme bullish sentiment as per their proprietary India Bull Bear Index and extended absolute valuations to its own history as well as relative premium to peers. He says with 6 Fed rate cuts expected in 2024, He senses a near market consensus on a perfect soft landing for the US. Vikas says the rally after recent state elections also appears to have baked in a third term for Prime Minister Narendra Modi. Their quantitative analysis suggests a need for the Indian 10-year bond yields to cool off by over 100 basis points and bond equity valuations to sustain well over their historical average to get more returns than the cost of equity. He also says banks, insurance and energy are their key overweight sectors while they remain underweight on IT and consumption.
Okay, near perfect landing. Like that phrase, and I think that's what more of the concern also is. Anyway, let's move on to some money market views now. On the rupee, Pankaj Chitlangia of First Basis says FOMC minutes didn't reveal any meaningful discussions on when to start lowering rates. The probability of a rate cut in March dropped from 90% a week back to close to 70% now, resulting in a relief rally in the dollar index. This rally is likely to be short-lived and capped at 102.80 and gradually move back towards the 100 mark on the DXY. However, this will keep USD-INR pair in a mild upward bias for the short term, with resistance at 83.55 and support at 83.15.
And on the bonds, Parul Mithal Sinha of Standard Chartered Bank says that the India rates continue to remain range-bound with a slight upward bias due to high global rates and more than expected Q4 state borrowings announcement. She also says that overnight rates continue to trade near the MSF rate as liquidity remains tight despite the announcement of VRR auctions. She sees normalization of overnight rates by the RBI through sustained VRR auctions as a key trigger for the rates market. She expects the 10-year benchmark bond yield to trade in a range of 7.15 to 7.25% in the very near term.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. Looking at Bajaj Finance, Vedanta, IndusInd Bank, Ujjivan Small Finance Bank, IEX. You have Chambal Fertilizers and Dr. Reddy's. All of them will be reacting to positive news flow. On the flip side, Bharat Forge, SAIL, PGR Energy could be reacting to negative news flow.
Okay, more on all of those stocks coming up in just a bit. But let's first kick it off with some perspective on the market. Arvind Sanger, Managing Partner at Geosphere Capital Management, is with us. Arvind, good morning to you. Good evening, rather, your time. And I wish you a very, very happy new year to start off with. Well, markets are fretting. Now they're fretting over whether they expected too many rate hikes, whether 6 is too much. Maybe the Fed won't do. And there's suddenly a lot of pullback happening. What do you make of the way Wall Street has opened out to the new year?
Well, firstly, let's be clear. We had such a fantastic December in terms of market rallies, both in the US and in many other markets, including India, that, profit-taking and finding some excuse for profit-taking is natural. And then there are some real, issues here. Oil has moved up because of the Houthi action in the Red Sea. We are seeing shipping rates across containers and other things that have driven inflation in the past moving up sharply. They moved up 25% in the last 3 weeks. So, there is some countervailing look. Rate cuts were based on inflation is coming down sharply and is going to keep coming down. The Fed minutes, in my opinion, were, maybe somewhat of a trigger, but the more important point is that we are seeing some other things that are causing some disquiet in markets about inflation maybe not coming down as quickly. We were seeing everything come down, and now it's not. So I think that's causing a little bit of a pause in this euphoria. And frankly, markets were overbought, so they were prone to profit taking. So I think it's a healthy correction. I have been in the camp of a recession likely in the U.S. I was wrong in 2023. Right now, I'm more ambivalent, but I am watching this inflation kind of reappearance in some sectors and want to see if this is transitory or this could cause inflation to get stuck at higher levels than what the Fed would like to see. And if that happens, then the rate cuts may be pushed further back out.
Okay, so this is a healthy correction, you say. Arvind, hi, good morning and Happy New Year to you. What do you do when the market is correcting in a healthy way? I mean, do you jump in? Do you stay cautious? What should an Indian investor do right now?
Well, I would say that, it's hard to make these twist and turn calls that, market is up, market is down. But I would say, if you have good companies in mind that you've been wanting to buy, and frankly, the mid caps have gotten even more frothy than the large cap market. But if you get some meaningful pullbacks to levels which is attractive, it would be time to buy. argue that the mid and small cap indices are still in overbought territory. And therefore, I would not be rushing in and saying, the correction is over, let me buy. I would be a little more, greedy about looking for opportunities because, when everything is going up, everybody has this FOMO of, I've not bought it and so I need to jump in. But don't be too quick. I think let things get back to levels which are within historical ranges to dip back in. So I would say be a little bit more patient, especially the mid caps have not come up as much as the large caps have.
Hi, Arvind. Morning. Good to see you. Well, if you're looking to buy into some large caps, beg your pardon, what would you be looking at? Will it be the banking names because they still have valuation as well as earnings outlook which looks positive? Or will you be buying some of those old economy stocks, power-related stocks here in India? What would be on your buying list if in case we do go for through a phase of some consolidation or maybe a bit of a downtake?
Yeah, I mean, I think, financial sector, some of the higher quality names there would certainly be amongst the ones that would make the list. IT has sold off sharply. We've not owned IT all of 2023. We're now going to be looking at it if it gets much more of a correction. Those are high quality companies that have, long-term, some decent, not great fundamentals, but decent fundamentals and attractive valuations. And some of the old economy stocks, even the metals sector, which has gotten hit on this dollar rally, we are interested in taking a look at some of those companies and seeing if valuations get attractive. Those are certainly not gone to any overbought conditions, so there could be some opportunities there. So, we are looking at a mix of old economy and maybe a little bit of the IT, depending on the magnitude of the pullback where the opportunities get more interesting.
Okay. IT is interesting. I remember Bernstein giving us a non-consensus call. I mean, they're liking the sector. This morning, by the way, JPM has cut the extent of its bearishness on IT. JPM was the biggest bear on Indian IT, but now they've, I think, upgraded the sector to a neutral at least. So IT is an interesting one. Arvind, just a word on financials as well. What would you buy? I mean, there's one big, again, consensus thought process here that large banks will start doing well. Do you agree with that? And beyond the big banks, anything else you'd like to buy here?
Well, I like the big banks too. I wouldn't be dipping my toe into too many of the smaller names. We have a couple of specific NBFCs we already own, but I would be looking at some of the larger banks into a pullback. The higher quality banks, the Kotaks, the HDFCs, and maybe even the ICICIs. Some of those, in that league of banks, if we get pullback, because I'll be honest with you. The market is not cheap, and therefore we are moving a little bit up the quality spectrum, even into pullbacks, because we find the valuations there more compelling than some of the more risky smaller cap names.
Jefferies put out a very interesting note a couple of days ago, Arvind, where they talked about how the multi-year capex cycle in India is just starting to unfold. Where they speak about how housing, corporate capex and government capex, all three elements are now coming together in a big way. Do you think that this could be a great opportunity for investors, both in, capital goods stocks, in infrastructure names, in some of the allied themes? If yes, where should one look?
Yeah, I think the capex theme is important. And, we look at companies that have benefited from industrial capex. We own one or two there. But I think, obviously, L&T is the big one, right, across multiple sectors. But there are many niche companies across various parts of the economy that benefit, from infrastructure, from private sector capex, companies that sell equipment into that space or others. So, I think finding the right companies at attractive valuations, which has been, frankly, hard to do, as a lot of people have chased after those names. And private capex and overall capex growth has been a theme that is well understood. So it's not a new thing that Jefferies is just, mentioning. I think it's a theme that has been around for all of 23. People have been talking about it. But I think there are some opportunities selectively that we are invested in. And if any pullback happened, we would look at other names in that space. We are a believer in that thesis, but, it's not an early cycle play that people haven't discovered yet.
All right, we'll leave it at that, Arvind. Thanks a lot for joining and appreciate your thoughts. So this is just a healthy correction in an uptrending market. That's the word coming in from Arvind Sanger. So not the time to be cautious just yet, perhaps the time to be building your shopping basket as well. If there is a big dip then or a big pullback, look at buying individual stocks, is what he says. Let's slip into a quick break. Lots of stocks in focus on the other side, so our entire team will be back in a bit.
Welcome back. While we've been telling you that it's likely to be a cautious morning of trade, at least to begin with, let's put the spotlight now on individual stocks. Our team is standing by with a top 10 list of stocks to watch out for this morning. Hi guys, morning to you. Let's kick it off with Abhishek with what perhaps could be, the stock of the morning, Bajaj Finance. Some breathtaking numbers there in the update, Abhishek.
Well, the business update of Bajaj Finance has shown more than 7% sequential loan growth, and this has come on the back of the fact that even in Q2, the loan growth was north of 7% plus. So AM growth on a YY basis is perhaps the best that you are seeing in last 16 quarters of 4 years, coming in at 34.7%. Cross-sell rate has actually improved to the same customer. Their ability to cross-sell more products, that's increased to 7.5% versus 6.5% in the previous quarter. The new loans are up 25.8% YOY and about 15.6% sequentially. Quarter on quarter, this is the lowest growth that you are seeing in a Q3 in last 4 to 5 years. However, 15.6% is a healthy loan growth. Customer base is up 21.7% YOY and about 5% sequentially. Deposit momentum continues to remain strong, nearly up 35% YOY and about 5.8% sequentially. Liquidity in the balance sheet, that's gone down on a YOY basis, which is on expected line with many NBFCs. 11,600 crore is the liquidity in the balance sheet, which is down 9% YOY, but up about 1.75% on a sequential basis. Back to you.
All right, Abhishek, thanks a lot for that. Well, I'm looking at Vedanta, and yesterday, an otherwise weak market where you had the metal index under pressure, Vedanta was one of the only stocks actually that ended in the green. And we had news that came post-market hours that, in fact, the Vedanta Resources, they have got bondholders' consent to restructure 4 series of bonds. That's over the next few years, those bonds that were due. Now, the consent rate that they've got is closer to 97% out of the 100%. The threshold limit is around 67%. So they passed the test out there. The total value of these bonds over the next few years is around $3.8 billion odd. And the series is 2 in 2024, 1 in 2025, and 1 in 2026. So, basically, how does this impact that? It takes off the immediate pressure with regard to debt obligation. So that's good news, right? The only problem is if the debt obligation on the promoter entity is less, then could you be bracing for some lower dividends? Remember, that's been the big story, right? Over the last few years, Vedanta, valuation-wise, it's very attractive. But people have been buying the stock to get this hefty dividend because the promoter himself requires the dividend out there. So that's the flip side to look at it. In terms of their operational update, aluminum as well as power sales, good on them, double-digit growth out there. The problem is they're still not able to ramp up the oil space. But I expect the stock, at least for starters, to open up in the green because getting the consent of the bondholders to restructure some of those bonds that were due in the next few years is obviously good news.
Okay, well, I'm also looking at Bharat Forge this morning, and I think that, that stock could be in the red today because the North American truck sales that have come in for the month of December, the Class A truck orders have been on the weaker side. It's down 7% year on year and down 28% on a month-on-month basis, the December Class A truck orders. Now, the absolute figures come in at 26,620. This is the lowest Class A truck orders that we've seen in the last 4 months. So on that account, I'm going with red for Bharat Forge, for Ramkrishna Forgings as well. But remember, for a company like Bharat Forge, it's a diversified conglomerate. So it has about 12-13% that comes in from the North American truck market. So yes, a little bit of disappointment is what you could see over there. But, keep an eye out on these stocks.
Okay, absolutely. So watch out for some of these stocks in the North American Class A truck manufacturing chain. Back to Abhishek, then we have some more updates, this time from IndusInd Bank and Ujjivan Small Finance Bank. How do they look, Abhishek?
IndusInd Bank growth rate on the business front looks to be on the weaker side. Let me explain how. Deposit growth is at 13.4% YOY and about 2.55% sequentially. So YOY, the growth is the lowest in last 6 quarters and sequential growth is the lowest in last 15 quarters. CASA ratio is the lowest in last 27 quarters or nearly about 7 years, coming in at 38.5% versus 42% YOY and about 39.5% sequentially. The good part in the business update is that the retail term deposit deposit. All the retail deposits have actually shot up by almost 20% YOY and about 5.2% sequentially. Advances growth at 19.8% YOY and about 3.6% sequentially. The growth is the lowest in last 4 quarters on a YOY basis and the lowest in last 8 quarters on a sequential basis. So their CD ratio has improved both YOY and quarter-on-quarter. So we'll be watching out how this weak business updates gets reaction in the market. Ujjivan Small Finance Bank, loan growth remains healthy, asset quality and CASA has improved. Deposit growth is at 29% YOY and about 2.5% sequentially. CASA ratio has also improved on a sequential basis, and AUM growth is robust at 27% YOY and about 4.5% sequentially. Gross NPA and portfolio at risk both have improved sequentially, so you can see some green tick on the stock today. Back to you.
Thanks a lot for that, Abhishek. Well, let's hop across to Vivek. He's here to tell us about some more stocks that he's tracking. Vivek?
Well, good morning. The stock on my radar today is IEX. So IEX, what's actually happened is that, the December operational sales numbers have come in. Along with that, the volume numbers for Q3 has come in. And the key takeaway is that, short-term power exchanges are making quite a bit of a comeback in terms of the actual volumes of electricity traded. And along with that, IEX has also managed to garner further market share, so wresting back some of the control that it had in the short-term power market from HPX as well as the other power exchange. So when you're talking about total December volumes, it's up 14.9% on a year-on-year basis, 9,707 million units. Q3 volumes up 17% on a year-on-year basis, again quite strong. What, however, happened is that the market clearing price, or the price at which it was traded for this particular quarter, has come in at 4.54 rupees a unit, which is down almost 13% on a year-on-year basis. The company says this is due to increased sell-side liquidity seen as far as the exchanges are concerned, and they attribute it to favorable policy as well as regulatory interventions. Now, what they're saying is that going forward, sell-side liquidity is expected to further improve, leading to a further decline as far as power prices are concerned on the exchange. This means there could be more volumes as far as short-term power market is concerned.
All right, thanks a lot for that. Well, Sonal is with us. She is going to talk about the top stocks in the news this morning. Sonal, what's on your list?
Good morning, Sonia. 4 stocks on my radar. Let me start with Chambal Fertilizers. The company will be considering a buyback on January 8th. So basically, there's a board meeting then. That stock should see some green today. We have Dr. Reddy's on our radar because they've acquired Menu Labs business from Amaris, which is a women's health and dietary supplement branded portfolio from Amaris. They have acquired entire Menu Labs supplements portfolio. So that stock will be in focus. We do not know what consideration it is, but yes, this stock will be on our radar. We have SAIL, which is in focus because divestment of Salem Steel has been called off by the centre. This is third unit of SAIL whose divestment has been put on hold. Lastly, BGR Energy. The company says that SBI and Central Bank have classified the company's account as an NPA, and total exposure to SBI is around 2,060 crore rupees, to Central Bank is 74 crore rupees. However, they go on to say that they have been regular in servicing interest and other charges to SBI and Central Bank, but that stock should see some pressure.
Okay, all right. Sonal got that. Thank you very much for putting those stocks on our radar. Let's quickly recap the list then. The ones that have positive news flow around them are Bajaj Finance, Vedanta, IndusInd Bank, Ujjivan Small Finance Bank, IEX, Chambal Fertilizers and Dr. Reddy's Labs. While stocks that have negative news flow around them are Bharat Forge, SAIL and BGR Energy Systems. That's our list, the stocks that we'll watch out for. Now let's turn our eyes to interesting brokerage notes of the morning. We have Sudarshan joining in with that. Sudarshan, what's looking interesting to you? What stocks on the radar?
In brokerages today, I have 3 stocks. First one is HSBC on Adani Ports. It has a buy call. Target is raised to 1250 from 920 per share. It says Supreme Court order should cement investor confidence. Verdict should renew company's expansion and shift focus to its solid operations performance. Company may be more open to inorganic opportunities and gearing its balance sheet. HSBC expects 17% CAGR in EBITDA over FY 23-26, and it says return on invested capital will rise from 13% in FY 23 to 17% in FY 26. Next one is MS on Indian Hotels. It has an overweight call. Target is raised to 490 from 450 per share. It sees continued double-digit growth in industry, and ramp-up of Ginger, Mumbai and trends in RevPAR will be key to track. Last one is MS on TMT sector. TMT is technology, media and telecommunication. In internet space, Zomato is top pick. Target is raised to 150 from 140 per share. It says after strong 2023, it sees merit in being more selective in 2024. Also, earnings momentum holding up well should support multiples for internet group. In IT, it has become more selective, and in telecom, it sees limited upside. In the IT sector, it has an overweight call on Infosys and CN, and underweight on Wipro, Tech Mahindra, LTTS, and Tata Elxsi. Back to you.
Okay, thanks a lot for that, Sudarshan. Well, let's wind this down then with Manisha, who's joining to tell us what all's going on with commodity prices overnight. Morning, Manisha. Crude oil prices spike, right?
Oh, well, yes, 3 to 4% on the higher side for crude prices for both the varieties, and that is after shutdown of an oil field called Sharara. This is in Libya, and there are some protests happening there. Now, Sharara produces 300,000 barrels per day, and this immediate shutdown has had premium in prices. In any case, the markets were dealing with the Red Sea tensions, which have been keeping the prices on the higher side. In addition to that, you also have the U.S. crude inventories, which have declined by 7.4 million barrels in the previous week. This is double the number than what the street was anticipating. So that also is showing in prices. The OPEC and allies, in the meanwhile, have announced a meeting on 1st of Feb to talk about the supply and the demand projections for this quarter and the next as well. So that is something that the street will keep an eye on. While the crude prices are up, can't say that about the metals, because it's another day when Asia has opened on a weaker side for the metal prices. Copper is now trading at a 2-week lows. We've seen aluminum and zinc also decline by 0.5 to 1% in early trades.
All right. Thanks a lot, Manisha, for that. Well, let's slip into a quick break. On the other side of the break, Dipan Mehta of Elixir Equities will join in for some stock talk. Do stay tuned in.
Welcome back. You're tuned into Bazaar Morning Call. Well, the GIFT 50 suggesting some green to kickstart trade. But how long does it stay green? Well, that's something that we'll have to eye. By the way, we're getting another update coming in from AU Small Finance Bank. The advances are up by close to around 20% on a year-on-year basis. And on a sequential basis, it's up close to around 4%, while deposits are up 30%. And on a sequential basis, up close to around 6%. We'll try to get in Abhishek to give us a quick analysis on that one as well. But let's focus on a couple of stocks that will be reacting today. Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Always good to see you in. Dipan, tell us with regard to the top stock, I think that's going to be in focus. Bajaj Finance, good growth is what we've seen out there. AUM clocking 3 lakh crore odd. What would you do with the stock? It is expensive. It's always been expensive. Would you buy into it, or would you avoid it till it comes down a little bit?
Yeah, good morning, Nigel, and great to see you as well, and Happy New Year. See, I think the Bajaj Finance numbers are as per what streeters have been expecting, slightly better than what we were expecting. But largely that seems to have got discounted. Valuations are, of course, on the higher side. And overall, I think market, as per our expectation, is expected to be subdued. So from that point of view, at least on a short to medium term, we'd like to just be a bit cautious. But long-term prospects of Bajaj Finance are fantastic. And despite so much of competition coming in from banks and fintechs, they still seem to have maintained or even grown their market share. And that's really quite impressive. The only disappointment is that they're making adequate progress on the super app and diversifying into some of the other financial products rather than just lending.
Okay. Dipan, hi. Good morning and thanks for joining in. This market has started to cool off a little bit. I don't know if the rally has paused. It may be too soon to say that. But if this continues, then what are the stocks that you're looking at? Perhaps, if there's a 5 to 10% dip, you'd want to jump in. What's your list?
Good morning, Sonia. I think the list has to be the large cap stocks, the likes of Reliance, HDFC Bank, ICICI. You could add Bajaj Finance to that list, maybe even a Maruti as well. I think it's important to get into the safer stocks in the large cap space. Even large cap IT like Infosys, TCS, to an extent, Pharma stocks, Dr. Reddy's. These are the companies, which I feel will outperform when there is a slight correction in the market. I'm not that optimistic on mid-cap stocks, where I expect the correction could be quite brutal.
So expecting a brutal correction in mid-caps, huh? Dipan, that's interesting. Till now, at least till yesterday, that's where everybody was rushing. while the large cap indices were losing ground. Anyway, we're speaking about Bajaj Finance. Let me ask you about the other Bajaj, Bajaj Auto. What a move yesterday after the buyback announcement, right? 7,000 on the stock. What do you think? It's had a great run. The question is, can one still buy? Should one buy? Should you look at, iShares as maybe as a dark horse, catch-up player of the year? What would you do with the two-wheeler guys?
Well, I think phenomenal performance from Bajaj Auto, and also the fact that they're doing a buyback is extremely investor friendly and certainly will go a long way in improving their return ratios as well. It's a very well managed company, highly focused, and at points of time we found that the focus was actually impacting the performance, especially when we saw the growth of scooters and the growth of other EVs as well. But I think it seems to have got its own act in order. So generally positive on Bajaj Auto, and I sense that even if there's a mild slowdown in two-wheeler sales, the fact that it has such a huge export business will hold Bajaj Auto in good stead. I expect the exports to start picking up much better, considering that global macro factors seem to have stabilized. And Eicher Motors has been a favorite of ours, as Nigel knows. We talk about it a lot. But really disappointed with the numbers coming through, especially the export figures. I think that's one thing we need to ask the management, that despite having invested so much in trying to set up the export business and in terms of network and distribution, the year-on-year growth numbers are always very disappointing. This time they were negative, in fact, and that's very surprising because exports is supposed to be a huge growth engine for Eicher.
Okay. I want your thoughts on the defense space because, that was the big mover, right, in 2023. And looks like the government's not taken its eye off that sector, and it's not taking the eye off that sector anytime soon. So let's get you a CNBC-TV18 exclusive now. India's defense production is likely to cross 1.5 lakh crore rupees, says the Union Defense Secretary Giridhar Aramane. Speaking to my colleague Parikshit Luthra, he said that at least 45% of orders from Defence Ministry will go to the private sector in 2024, and the future focus of PSUs and private sector must be on UAVs and on robotics. So let's listen in.
Is the modernization of our equipment, which is already in our inventory, whether it's the battle tanks or the ships, the naval ships, which need to modernize very quickly. We have very active borders. We have very active coastal area. So it is essential that our existing platforms remain in ship shape continuously. For this purpose, we have to provide constant supply of spares and constant maintenance in terms of the power packs, in terms of the transmissions, navigation, etc. So this will be the first level of focus which has been attempted in the positive indigenization list and also the negative import list. So we have reached a certain stage where we can be confident that the existing platforms will not suffer due to the supply chain disruption. Apart from this, we also have to concentrate on emerging technologies. As we have observed in Ukraine as well as in Israel-Hamas conflict, the huge platforms like warships, submarines, or fighter jets can be neutralized by very small platforms. In fact, the attacks in the Indian Ocean region or Arabian Sea by small drones, which cost $500, which inflict considerable damage on large platforms, is a lesson various armies are learning from these conflicts. Hence, we should be able to defend our borders and our economic zone with the help of the cheapest possible solution. We need not basically concentrate on large platforms where the others have an advantage. We should be able to procure drones, unmanned aerial vessels, and other similar equipment to protect our national interests. Further, the robotics have brought forward a great opportunity to ensure that there is very little loss of life in hazards, disaster relief, as well as counterinsurgency operations. In that particular field, there is a huge scope for investment by the private industry. For example, if we had foliage penetrating radars or robots which can do surveillance of the location of the terrorists, we could have prevented the loss of life to our brave soldiers in Jammu and Kashmir. And such platforms will be of great use in Naxal affected areas also. So Indian industry need to ramp up their capacity to deliver such platforms. Apart from this, we got demonstrated ability to manufacture several platforms in air defense as well as in the ground mobility. We continue to build upon these. We continue to work with our industry to ensure that India's security needs are fulfilled by our own companies.
Right. So I'd like to ask you about the defense production targets. In FY23, India's defense production crossed 1 lakh crore for the first time. What do you see the number as in FY24 and going forward?
Yeah, we are aiming very high. We have crossed 1 lakh, but we are not satisfied with that. We are still the largest weapons importer in the world until last year. So we should be able to obviate the imports by increasing our own capacity. I am fervently hoping that our production this year will cross 1.5 lakh crore and may even inch up higher if exports offer a better opportunity this year. Largely, 1,75,000 crores will be a very ambitious target, but I don't think Indian industry will fail me on this ambition.
So could you give us a sense of the uptick that you expect in terms of total exports in FY24? FY23 was a record 16,000 crore. What could be the possible increase? How much of this will come from PSUs? How much of this will come from the private sector?
I am hoping that we will achieve our set target of 20,000 crores this year if everything goes well. As you understand, we don't supply to conflict zones any kinetic equipment. We also have several policy restrictions on whom to send and whom not to send. So all things going well, we can supply to many of our friendly foreign countries for their self-defense, not for any aggressive purposes. So 20,000 seems to be a reasonable target by now. The private companies are picking up in a major way. They are supplying to major multinational companies such as Boeing and Lockheed Martin, etc. I hope that they will be able to contribute at least 40% of this year's exports.
Well, then you can catch excerpts of that exclusive conversation with the Defense Secretary all day, only on CNBC-TV18. But let's get back to the market action then. Last few days have been a little bit jittery, to say the least. This morning, the GIFT 50 is suggesting some green. Anuj joins us to tell us how is he reading all the trade data. Anuj, morning.
Morning, guys. Well, you know what? I'm getting a premonition today of a 100-150 point Nifty rally. Let's see if that plays out. You know, there's absolutely no trigger for that. It's just that, you know, that movie, Jab Bhi Met, Kareena Kapoor says that there's no reason, but just I'm getting the feeling. It's that kind of a feeling this morning. The market's not breaking down. It's just a correction. And the mid-caps are still strong. In fact, yesterday we hit an all-time high on the mid-cap index. And normally, no correction can be big unless you start to see deterioration in the market breadth. And the advanced decline has been quite strong. The US market has been falling for the last 2-3 days, led by NASDAQ because of the bond yields and the dollar index over there, which in any case for us was never the decisive factor for the market rally. Our rally was entirely based on our own fundamentals, and I think that they have still remained quite strong. Of course, January normally is a bit of a tough series, tough to negotiate, and that's what we're doing. But I think the market is showing some signs of perhaps support at lower levels. I think the big move today could come on the IT index after that JP Morgan upgrade. And the index itself is at make or break level. So I think that's something, if that starts to support, the bank Nifty also showed some resilience yesterday. Maybe the market also starts to move up. Also, some shorts have come back in the system. If you look at what happened yesterday, there was long unwinding and there was short build-up. The put-call ratio has fallen to 0.76, which is really an oversold zone. So all of that perhaps telling you that maybe there's some support. Of course, you've got to watch some levels. On the Nifty, the first support level is 21,450 to 21,500, and the bigger support is 21,238 to 21,322, the 20-day moving average zone. On the bank Nifty, I think we showed some resilience yesterday. I'm watching out for 47,450 to 47,500 as the first support zone, and 47,300 to 47,400 as the second support zone. I hope we don't get there, because as I said, I want my premonition to be right.
Absolutely. Let's. I think the bulls will really love to see that play out, Anuj. Let's see how the day goes. We do have to take a very quick break on that note. We'll come back on the other side, and when we do, we will have our technical experts with us, Mitesh Thakkar as well as Srikanth Chauhan, to give us some ideas about today's setup and then some trading action as well. Welcome back. Asian markets are extending a little bit of that decline, so just got an eye on the screen here as well. Singapore, Hong Kong, mainland China, Japan, of course, which has come back after a long New Year break. All these markets are down and out, so the setup is not very, very positive. How should you be approaching the market on a morning like this? We have Mitesh Thakkar and Srikanth Chauhan joining in. Gentlemen, morning. It's been a couple of tough days for the bulls out there. Mitesh, how would you look at things? Because supports have not been holding. I mean, the market's been making lower lows at the Nifty level. What's your approach for the day? You're on mute, I think, Mitesh. Okay, let me come to Srikanth. I think there's a bit of an audio issue with Mitesh's line. Srikanth, morning. Same question to you. How do we start today?
Good morning, Survi. Good morning, everyone. I think, we may see some flattish sort of opening, but the way we saw some correction in the market since last 2 days from the levels of 21,850 to almost 21,500. Now, the next level of support or support zone is between 21,450 and 400 levels. So there we are expecting market to come under some specific buying interest. In case if we see the market is falling to those levels, then certainly we should look for adding some long positions, because it's a 50% retracement of the entire rally that we saw from the levels of 21,000 to almost 21,850. So 21,400 should act as major support. Also on intraday basis, the markets turned oversold. So we may see some recovery, but in case if there is any higher opening, and if we see the market is moving towards 21,650 or 700, then there we should look for taking some profit on long positions, or at least we should look for reducing long positions. For the bank Nifty, 47,400, 300 is the area of support, and there we are expecting buying strength to come.
Okay, got it. Thanks for that, Srikanth. Mitesh, I think you're back with us. Tell us, how would you view the Nifty from here on? The GIFT Nifty suggesting a 20-30 point uptick. Your view? Oopsie daisy. He'll be back with us in just a bit. But Srikanth, since you've already given us your index call, let's hear out individual stocks as well that you're tracking for today.
Nigel, I think there are like couple of stocks which are like really doing well, especially PSU banks. They are crossing their immediate highs. And even if we go through with their daily as well as monthly charts, then there we are seeing specific strength. In that specifically, we like Canara Bank, which is around 462, 463. The stock has broken its previous swing high, and based on its technical formation, the next level to watch out for would be 470, 475 in the near term. So Canara Bank looks a strong bet to buy at current levels with a stop loss at 450. We also like GMR Infra, which is around 81, 82 levels. And here also the stock is forming some rounding bottom sort of formation on weekly and monthly charts. So based on the formation, we can see the levels of maybe 100, 110 in the long run. But in the near term, we can see the levels of 87 or 88. So it's a buy at 81, 82 levels with a stop loss close to 77. And finally, as Anush mentioned, I think IT stocks have fallen to their extreme levels. And from current levels, we are expecting some recovery in stocks like Tech Mahindra as well as Wipro. But specifically, Wipro is very close to its important support area around 455. So it's a buy at current levels with a target of 475. We can keep stop loss around 445.
Okay, all right, Shrikant, thank you very much. And thanks for mentioning IT as well. I was going to ask you about that. You have a good trading session. We'll actually come and give you the highlights of this JP Morgan call. That's the big buzz on the street today, because after a long time, they have upgraded the sector to a neutral now, not as bearish on IT anymore. And why? We'll get to that in a bit. Right now, break. We'll come back on the other side. We'll also have Digant Haria of GreenEdge Wealth joining in to talk about the recent updates that we've seen from banks and NBFCs.
Welcome back. Chandan Taparia, Derivative and Technical Analyst at Motilal Oswal Financial Services, joins us now. Chandan, hi, good morning. Given that it's been a bit of a volatile market, what's your view now and what are the stocks to look at?
Good morning, Sonia. Thanks for having me. We have seen some profit booking decline in broader market in last two trading sessions. Just on the start of new year, the index was holding well to 21,680 zone. But in last 2 days, it has broken and started to form lower highs and some supports are shifting lower. We have seen decline in put-call ratio as call writing and put unwinding started to witness. And my only concern is that index is still making higher lows on the weekly scale from last 10 consecutive weeks. So in next 2 days, if it fails to hold the formation of higher lows on the weekly, then some more profit booking decline could be seen in the market. So as of now, 21,680 could act as a hurdle that earlier was acting as a support. Now there will be role reversal in the lower time frame chart. So till it holds below 21,680, some profit booking decline could be there in the market towards 21,200 zone. So looking for some sort of consolidation or some sort of profit booking in the market over the next 1 or 2 days. Now looking at the Bank Nifty index, that is giving mixed cues. But here also till it holds below 48,250 zone, it can see some decline towards 48,250 zone. Now looking at the stocks, here the story is totally different. We are witnessing good stock specific movement in the market while indices are just feeling some sort of resistance. So first that is buy on Canara Bank. We have more positive on the Nifty CPSE index, whether it be PSU banks, defense or railway. So in PSU, we like Canara Bank, and the stock has given a price volume breakout on the daily chart. We have seen short covering as open interest fell by 2 to 3%. Stock is holding well above its immediate moving average. And delivery volume surge also indicates some uptick. So recommended to buy on Canara Bank with a stop loss of 450. And here we have a target towards 480 level. Second trading idea, there is buy on Cipla. We have positive on the Nifty Pharma index. Nifty Pharma is doing well, continuously forming higher top, higher bottom. And Cipla has given a consolidation breakout of last 21 days with surge in the volume and open interest activity. Even we have seen good activities in the counter and option segment. So recommending to buy on Cipla with a stop loss of 1280. And here we have target towards 1355 level. Last trading idea, there is buy on defense. There is buy on HL. The stock has given a consolidation breakout of last 18 trading session. One of the strongest counter, added open interest by 7%. A small follow-up can cheer the rally by 5 to 7%. So recommending to buy on Hindustan Aeronautics with a stop loss of 2830. And here we have a target towards 3,000 marks.
3,000 target on HAL. Okay, got that, Chandan. Thank you very much for all the calls today. You have a good trading session and we look forward to our next chat. By the way, I don't know if, Anuj's wish might actually come true. If you go by the pre-open rates, the Nifty is actually up despite all the gloom and doom talk. In the pre-open, the Nifty is up 80 points. We'll see if this really plays out. But what seems to be working for the market is autos and some IT stocks. IT, we've been going on and on about this JPM call. We'll tell you more about it. Tata Motors is the other stock on the pre-open screen, which is looking very, very smart, 2% higher. Now, that is also a JP Morgan call. They put out a huge target on the stock, 900 plus, I think 920 or thereabouts. They're talking about better free cash flow at JLR, good performance in the India PV business as well. In fact, Deepan, I think I'm sticking to autos today. So Tata Motors, do you think that higher levels are possible? It's really been the auto stock of 2023 anyway. But is it good for more?
Yeah, well, I think that, I would be a bit cautious on Tata Motors because a large part of the revenues come from GLR, and the way things are shaping up in the global markets, China, UK, it's time to be a bit cautious. And the valuations, I think there was a valuation gap between Tata Motors and other auto companies, and that valuation gap seems to be gradually filling up. So, and also there's a lot of volatility in Tata Motors earnings, which always kinds of surprises or disappoints. So from that point of view, I'm not that optimistic on Tata Motors, and still Maruti remains the top pick within the four-wheeler space.
Okay, well, the pre-opening session has, settled and looks like it's going to be a good opening. 100 points higher almost on the Nifty, 21,600. Now, one of the stocks of the day today could be Bajaj Finance. A very strong growth in Q3. The AUM growth came in at 35% year on year. It crossed 3 lakh crores for the first time ever. And the new loans that were booked during Q3 went up 26%. Digant Haria, the co-founder at GreenEdge Wealth, joins us now to talk about that. Digant, your thoughts on Bajaj Finance, on their numbers this time as well as on the stock?
Morning, Sonia. Last quarter was the first time after COVID that they reported more than 30% growth. If you remember, Bajaj Finance always did more than 30% growth before COVID. And then we had like 8-10 quarters of lull where the growth was, say, around 25%. This is the second time we are seeing this growth about 35%. So I think the company is really getting its mojo back in terms of, the higher growth rates despite the larger size. And one thing which I suspect is that, the RBI did a clampdown on unsecured lending, somewhere 40 days back. So I think Bajaj Finance is somebody who has his own balance sheet. They have, really great network to source loans. I think they would have got some advantage of this as well. So I was quite happy with the numbers, and I think, the stock has had a 2-year consolidation. I think the setup is ripe that, the stock will now, stop its time-wise correction and probably, give returns equal to the earnings growth or the book value compounding that it does.
All right. Hi, Digant. Morning. So you're sounding pretty impressed with these numbers in Bajaj Finance, but we've had a lot of other quarterly updates that came out as well. What stood out for you? One of those stocks besides Bajaj Finance?
Besides Bajaj Finance, I think, I could see a lot of struggle in a lot of these, the banks. The deposit growth has been a struggle for Bandhan or CSB or whatever you see. So I think the theme of this quarter, Nigel, would be, the borrowing costs inching up slightly, and, the banks or the NBFCs which are in the personal loan unsecured space, I think they would see a slightly slower growth than what we were building earlier. So I think, this was the Bajaj Finance really was the standout from the numbers which have come out till now. I think there will be few more good numbers, but a lot of them don't report these quarterly numbers. So at the start of the quarter.
Yeah, I was looking at Bandhan's numbers, and Abhishek points out an eye-popping figure, by the way. Bulk deposits, and Digant, you're talking about the struggle to garner better deposit share. Bulk deposits for Bandhan are up almost 13% quarter on quarter. That's how much, and obviously bulk deposits, then you have to pay more interest. That's the cost of growth really, to mobilize more funds, and that stood out for Bandhan. Digant, the word on IndusInd as well, because the growth rates, at least advances, look good to me. 19.5%, almost 20%, but it seems that they've, compared to the past, the growth numbers are petering off. So how would you read IndusInd's update?
Yeah, so see, IndusInd, before COVID, they really had a deposit problem because they did not have a very granular franchise. They tried to correct it in the last 3 years, and to some extent they have been successful also, but the environment is such that there is huge competition from deposits. So I think IndusInd will face that higher borrowing cost kind of a pressure, which it always used to face before COVID. I have no doubts in that. But see, the bank has, done a lot of work on OPEX, and the loan growth, especially in the microfinance CV, started to look up. So I think, IndusInd Bank, despite the tailwinds, I think, this is a bank which can do well for a few quarters. And numbers are not really impressive, but we have to see it in the context of what others will report in the coming days, because this quarter is not going to be very strong in terms of either growth or margins or, the pre-operating profits.
Digant, what about the big boy HDFC Bank? The second quarter, I think it will be reporting post its merger. What do we expect from there?
Nigel, HDFC had a deposit problem even before all of others had, because they have to replace the huge 5-6 lakh crores of liabilities of the HDFC Limited. So I am not expecting any magic in HDFC Bank's numbers. See, and we still have this quarter and the next, after which the base of this whole merger will settle down. So really no magic in HDFC Bank's numbers. It's just that the stock was very cheap. It has had some kind of move. But I think magic is still some time away, and we need not think that 2 quarters are done. So the numbers will suddenly start improving. That does not look like the case.
All right, we leave it at that. Digant, thanks a lot for joining in. By the way, in pre-opening, one more stock to look at is Angel One. The business update is looking very good. Their client base has gone up 15% quarter on quarter and 55% year on year. And the number of orders have also gone up. I mean, it's been a great year for this entire industry. Angel One now up 3.5%. But let's go across to Nimesh. He has the standout brokerage report of the day. Nimesh, what are you looking at?
Hi, morning, Sonia. So today's standout is on oil marketing companies. A big downgrade coming in from CLSA. So they've downgraded all the 3 OMC stocks to sell now from buy. And they believe that after a big rally in all the stocks prices, all the stocks have rallied between 30 to 60% in the recent months. So that's the key reason for the downgrade. Now they believe that the big rally in the stock price was largely on back of falling crude prices that will lead to a sharp reversal in the spot marketing margins. Now even if the crude prices can recover from the December lows is their base case. Now even if the crude prices don't recover, they expect that there could be a reversal in the retail fuel prices that can go up in run up to the election. So that could actually mean that the margins can squeeze from here on. So that's the key concern. Now they estimate that the current prices are baking in a lofty GRMs in FY25, which may not be sustainable for all the OMC stocks. In addition to that, all the stocks are now trading at a premium to the global peers of anywhere between 30 to 40% versus their average EV/EBITDA of 4.5x. So even in terms of valuations, there is no comfort yet. So that's the key reason they've downgraded all the 3 OMCs. Just to give a target price on HPCL, they have a target price of 360. On IOC, they have a target price of 105, which means a 20% downside from current levels. And on BPCL, they have a target price of 420, a potential 10% downside from current levels. So a big downgrade on OMCs from CLSA. All the stocks have been now downgraded to sell from buy earlier.
Oh, interesting. All right. Thank you, Nimesh, very much for placing that on our radar. So watch out for the OMCs. And now let's get to that call on IT that JP Morgan has put out this morning. Rima is joining in. Rima, I remember we had Ankur Rudra a couple of quarters back on Trading Hour, right? And he was so bearish, but it seems that view is slightly changing now.
Thanks so much for that. So this is a big upgrade by JP Morgan. If you remember, over the last 12 to 18 months, there were 2 big bears on IT. One was Nirmal Bang and the other one was JP Morgan. While Nirmal Bang continues to remain bearish or underweight on the sector, today JP Morgan has turned neutral on the sector after being underweight for the last 18 months. The key reason is they expect growth to bottom out and accelerate through calendar year 24 and 25. This growth acceleration will be driven by 5 key pillars. 1, cost savings. 2, declining drags from industries like banking, financial and telecom, which were under pressure over the last 12 months. 3, pro-cyclicality. 4, near-term Gen AI prep work. And 5, the low base of CY23. So JP Morgan upgrades Infosys to an overweight from neutral. They've also upgraded LTTS, L&T Technology Services, to an overweight from an underweight. So it's a double upgrade over there. While TCS, HCL Tech, Persistent, Emphasis have been upgraded to a neutral. So now JP Morgan has a fairly balanced view. They've got 2 overweights, Infi and LTTS. They've got 4 neutrals, TCS, HCL Tech, Emphasis and Persistent, while they continue to remain underweight on Techem, Wipro, LTI, Mindtree, KPIT and Tata Elxsi. The key here is look at the way the target price has been upgraded. Now, target prices have gone up by 24 to 80% on a pickup in growth, and 2, they also expect the PE to expand. So TCS's target price is 3,700. For Infi, it stands at 1,800. The other big overweight for them is L&T Technology, where the target price has been raised to 5,800 rupees.
Okay, and all the IT stocks are up and about this morning. Thanks a lot for that. Well, Soba is also on our radar. Sonal will tell us why. Sonal, over to you.
Well, you know, it's raining top picks from Motilal Oswal for 2024 and Sobha is one of them. Now, remember, the stock was up already 10% yesterday and Motilal Oswal calls it the top pick for 2024 from the real estate space. They say it is set to outperform in terms of growth after underperforming peers over the last couple of financial years. They are focusing on unlocking their vast land reserves and exploring external growth opportunities through their healthy balance sheet. So that's why they have a target price of 1400 on the stock, which is a 25% upside from current levels. Over the last 3 years, the management has been able to reduce the debt. Under the new leadership, they have been able to reduce it by 1300 crore rupees to levels of 1400 crore rupees. They expect companies' operating cash flows to increase to 1300 crore rupees by FY26. Now, there are some things which will be a problem. The resolution of ongoing cases, 3 of them will come up for you on the screen. That needs to be resolved for some of these hurdles to go away. But yes, they are bullish on the stock.
Okay, all right. There the bell goes. And we're off to a 70-point upstart. So 21,580 straight away. Let's see what's bringing up the green. Bajaj Finance, top winner on the Nifty right now, 2.5% higher. Tata Motors on the JPM upgrade, 1.5% up. As are some of the other tech stocks. Infi has started off with a gain of about 1.5%. By the way, even Bajaj Finserv is now tracking some gains. TCS is seeing some green. Let's look at LTI Mindtree, which is one of top JPM's top picks. That stock's up about 0.3% as well. Apart from this, Adani Ports is still seeing some traction from yesterday. Coal India continues to see some green as well. And the Bank Nifty is not looking too bad. The Bank Nifty, as the morning starts off, is up about 0.2%. By the way, the OMC stocks that Nimesh was just alerting us on, some of them have started off quite negative. So BPCL down about 1%, 1.5%. IOC, HPCL, the entire oil marketing pack is under pressure. Must bear in mind. But otherwise, Sonia, looks like a really good start, 80 points higher.
Oh, it does. You know, just to take you through individual stocks, right? Lots buzzing in trade. Bajaj Finance continues to be your big mover, 3.5% higher now on the back of strong business upgrades. Strong business updates coming in. Sobha is the top pick from Motilal Oswal from the real estate space. So Sobha is also putting on some weight in morning trade, 3.5% higher now. Bandhan Bank had a strong business update coming through this time around. So Bandhan Bank also holding up in the green, up about 1%. Angel One, the Q3 numbers looked very good. So Angel One up and about. Torrent Power is another one, 5.5% higher. In fact, this entire space, right, the power, renewable energy, Inox Wind, Torrent Power, all of these names looking pretty good this morning. And there's a lot of traction in the broader market. So the mid-cap index is now up almost 0.7%. The big space to be in, however, this morning continues to be from the frontliners, continues to be the IT space. So Infosys is your top gainer, up 1.5%. Apart from the Bajaj twins, Bajaj Finance and Finserv now up 2 to 3%. But we have Dheeraj Agarwal, who's joining in here in the studio, Managing Director of Ambit Investment Managers. Dheeraj, hi, welcome to the show.
Hi.
You know, a little bit of a pause in the market, but the market is not missing the woods for the trees. Clearly picking up stocks, buying individual names that are looking attractive. How are you feeling now? Are you also stock picking?
Yes, I think it will become a stock pickers market this year, is what I believe, because the easier run is probably getting over, where everything was running. This year, most of this year, I think the markets will become a lot more selective, and at the index or the broad market level, not as easy a run as what we saw last year. So we are going to see 2 or 3 headwinds as we go into the year, starting with perhaps the December quarter result season as it starts to unfold. The one thing which worries me about the results in the last 2 quarters is the sales growth, right? Sales growth is very, very weak at 5 to 7% range. All the earnings growth of 27, 28% is driven by margin expansion. And margin expansion has come because the WPI has crashed.
Right.
So that benefit will very soon start to fade away. And we need the revenue growth to pick up. So let's see.
And that problem could, hit the mid-cap and the small caps even harder, because if you don't see revenue growth and you're only depending on input costs to cool off, that's what could put earnings at a bit of a risk from the broader market. So let's see how that goes. Now, I wanted to ask you for 2024. In the last few years, ITC played a great innings, so to call it, out of nowhere. One of the years belonged to ITC. Last year belonged to Tata Motors, one would say, because the stock doubled. 2024, what do you think? From the Nifty pack, since we're talking about large cap names, who could take the cake?
So, the 2 strong trends, I think, continue in the market without going into specific individual names. One is the PSU space, and within the PSU, especially energy. I think that trend continues. The one expectation one has this year is banks, after a meaningful underperformance last year, will probably come back this year, especially selectively, if not all. Valuations have corrected, fundamentals still look quite strong. So these two spaces. Third, as you rightly pointed out, mid-caps. I mean, that's been on a boil for the last 2 years now. This year, I think mid-caps will also go through its own process of separating the good from the bad and not so good. I mean, one thing I would like to point out to your statement is that a number of mid-cap or smaller companies is actually growing even revenue at a significantly higher pace as compared to larger companies. So at this point of time in the David versus Goliath battle, it's the smaller boys seems to be winning.
Yeah, I take that point on board. The only point I was trying to make was that some of these companies, they win an order and it already gets factored into the market capitalization.
Yeah.
So some part of that, profitability is already being recognized at current date for the next 2 or 3 years. That's the short point that I was trying to make with select companies.
In fact, yeah, one thing that I've been saying of late is that in the current market, retail is actually the price setter.
Yeah.
And the institutions are price takers.
That's true.
That's a reality. I mean, which is exactly what you said, right? Which is, it reminds me of the market in 90s. 90s, it used to be exactly like that. As soon as an order or news would get announced, the entire NPV for the next 10 years would get priced in 2 days.
So get a little worried when you are in these times, but then, well, you take it and you run with it and you keep your guard up and make sure you participate, I guess. Dhiraj, season's greetings to you, and great that you could drop into the studios. Great to have in-person conversations. Just to go back to that point on financials, the big consensus sort of call is that we'll get a lot of FPI money back in big banks, and Bank Nifty should go higher. But what else? How else should one add financials to the portfolio? I mean, look at what Bajaj Finance is doing. Again, the narrative has been that because of a crackdown on unsecured lending, now cost of money will go up and maybe margins come under pressure. But then you get quality names which come out and put out numbers like the way Bajaj Finance has done, and the market's rewarding it. So should we not miss NBFCs? I mean, what all to put in the financial side of a portfolio?
So. See, market is also a little bit cognizant on valuations. If you actually divide this market into 3 parts, so very high growth companies, where literally what the market is telling us at this point of time is valuations don't matter. And there are a few examples like, let's say, Trend or some of the mid-cap companies, which is very high growth range. Then second bucket I would put is high growth, but not exorbitantly high. I think Bajaj Finance somewhat fits there. That's a space market has become a little sensitive about valuations right now. So Bajaj Finance has been doing well for the last 3 years, but if you actually see last 3 years stock price performance is 10 or 11% per annum return, not the exorbitant 30-40% CAGR the stock used to deliver prior to that. And for that, market is now moving or the investors are moving a level lower. It says, okay, if there's a 15%, 17% growth company available at more attractive valuations, I would prefer that rather than buy a 25% growth company at exorbitant valuation. So the middle segment of the stocks, in terms of stock price performance, is struggling a little bit. The valuations are not cheap enough for it to be attractive. Growth is not high enough for valuations to not matter.
Oh, okay. And where else do you see this playing out? I mean, just to go back to an argument, let's take IT and apply the theory that you just put out. I mean, patchy earnings, nothing very consistent. But now we're seeing, upgrade calls come in and some people are calling for a bottoming out. Where would you place it? It's definitely not high growth, but is it reasonable valuation? And therefore, what's your call?
IT, the big question at this point of time, and we are a divided house within my team, we're a divided house. We had a big debate on IT just yesterday.
Okay.
The big call at this point of time is whether FY25 growth will pick up as compared to FY24. Now, there's a little bit of a people wanting to have their cake and eat it too syndrome here, because we want sharp rate cuts coming out of the US. We are okay with the US economy going through a slowdown, soft landing, hard landing, recession, whatever that terminology may be. But slow down for sure so that rate cuts are high. But we want the IT growth to pick up simultaneously. There seems to be a little bit of a contradiction or dichotomy here, right? So one of the two views is likely to go wrong. Either we won't get enough rate cuts or the IT growth will disappoint. At this point of time, all the data suggests that US economy and some of the other parts of the world is indeed perhaps headed for a bit of a slowdown. So I would personally bet on the view that FY25 upgrades, which people are expecting, might not come through in IT.
Okay.
And in that context, valuations are not cheap enough.
Okay. By the way, I just want to point out that, in the real estate space, there's lots happening right now. Soba is up almost 6%. So just pull up that stock. We told you a while back that it's one of Motilal Oswal's top pick in the real estate sector. And that stock is piling on some weight now. How are you feeling about this space? Because it's now front and center in terms of investors, portfolios. But does it make sense even at this point to put more money here?
I think so. The sector is doing very well. So it's a cyclical sector, and these cycles typically last for 4 or 5 years or 6 years. I think we have done maybe 2 years of strong upcycle in real estate. So there is more to go. And all cyclicals will surprise you on both sides. It'll surprise you by its strength, both on the performance of the business as well as the stock price performance, and it'll disappoint you sharply on the way down when the cycle turns down. So I continue to like this space.
Okay, how are you positioned, Dheeraj, though? If you have to give me a long-short ratio, what would it be as of now?
As of now, we're running very, very neutral.
Very neutral, so 58?
No, my stock book position is probably 5% net long at this point, so very neutral.
Very neutral, all right. Yeah.
So in December we ran reasonable net long.
Yes.
Into the end of the month and early part of this year, we brought it down. 2 months of 8 plus 5.5, right? 13.5, 14%, 2 consecutive months of performance, 8 consecutive up years. At the very minimum, there should be a little bit of a correction.
So you've reduced your long positioning as of now. Okay.
And nudged the shorts also a little bit.
Okay, got that. Dheeraj, what about, are you ordering from Zomato? that was something that
Zomato comes up on all our discussions.
No, you were, at lower levels, you were one of the, you were in minority actually, when you were saying that you're quite positive about them.
Yeah.
But I think the last time you chatted, you said, maybe at these prices, you'll be thinking twice.
Yeah.
At current prices, what are you doing besides ordering?
So I'm not buying, but I think I like the stock.
It still has its course to run?
It has its course to run. I think some of these businesses are game changers, right? And how the margins will pan out is anybody's guess. Although looks like at this point of time that slowly they are able to nudge the fee higher, which is what the doubt, which has always been in that case.
Just very quickly, 30 seconds left on the chat, Dheeraj. Since you spoke about interesting businesses, we'll have Ola Electric come into the market. Now, here's a company, it's asking for a $7 billion valuation and it's loss-making.
Yeah.
It's not a new age company, it's not a platform internet company. There's a hard business, manufacturing business out there. But how do you think the market will react to some of these new high-profile IPOs come if they happen to be loss-making?
On this particular company, I don't know enough of numbers to be able to comment. But market has lesser appetite in general for loss-making companies right now. But if the company is profit-making and very high growth, it's got unlimited appetite for ramping valuations up. So, DOM's IPO being a case in point, it's a very good company. And one can question whether 90 times P is justified or not. But it's a high growth, excellent company, and valuations is in the creative it's a zone of creativity at this point of time.
Always good speaking to you, Dheeraj. Thanks so much for stopping by and giving us all those views, and wishing you personally as well as professionally all the best for 2024.
Thank you so much. Wish you all a happy 24.
Thank you.
Well, let's
Happy New Year to you.
Happy New Year.
Let's move on then to a CNBC-TV18 exclusive. Lupin is the first management on the show today. The stock has gained nearly around 91% in the last 1 year. Brokerage as well, they have a positive view on the stock. To discuss this and more, we have Mr. Ramesh Swaminathan, the Executive Director, Global CFO and Head Corporate Affairs of Lupin, who joins us on the show. Hi, Mr. Swaminathan, morning, and thanks so much for joining in on CNBC-TV18. Wishing you the best in the coming calendar year. Well, one thing that I wanted to ask you was on pricing. Now, tell us what are the key trends that could emerge from the pharma space on pricing itself. Bernstein, for one, they have written a note. They believe that US generic pricing could remain favorable in 2024. Do you believe the same?
Well, at the outset, let me also wish you a very happy new year, and thank you for having me on the show. You speak about pricing. For sure, in the last a few months, so to speak, pricing has been fairly steady out there. It's because of various reasons, I would imagine. The first is a lot of companies have been kind of shedding their portfolio. And as a result, in fact, there have been instances of shortages insofar as the American market is concerned. The second is essentially because of the fact that there have been rising interest rates. A lot of companies have also closed down. Factories have closed down and the like to kind of delever. And that actually meant that there has been a supply shortage again. And for that reasons, I think there has actually been a period of low price erosion, so to speak. Quarter on quarter, we saw, in fact, just about 1% price erosion. So hopefully this would stay for some time to come.
So just 1% price erosion. Mr. Swaminathan, hi, season's greetings to you, first of all. So to what extent are you expecting this price erosion to come down to?
No. So I was just saying between quarters, but if you look at, in fact, year on year, it's actually in the high, I would say low single digits, so to speak. It is certainly not in the same levels as possibly last couple of years, so to speak. It's come down dramatically. And of course, it doesn't necessarily mean that it could remain the same way because the number of players in the American market is still pretty high. There are close to about 170 producers of generics across the globe. And for every molecule that you take, you could talk about between 20 to 30, competitors, so to speak. The number of, OAIs has been coming down quite a bit. Essentially the FDA been a lot more, they've been doing visits and the like, and that means that a lot of factories have been getting clearances. And of course, there are, of course, expedited approvals because of GDUFA in the recent times and so on. So for those reasons, whilst this period is, of course, a period which reflects, in fact, lower price erosion, it does not necessarily mean that this is going to be the way in the future as well. So it really is going to be a wait-and-see policy from all players.
Mr. Swaminathan, just to complete that point on the US market, everything that you're describing is so positive for Indian pharma companies, right? But we're running into an election. What does history tell us? I mean, if there is a change of guard at the White House, does that really impact the way policy shapes up? As you're saying, FDA, a more benign environment, the pricing pressure reducing that you spoke of. Is there any impact?
I would imagine not, because close to about 45% of the volumes for generics actually comes from India. And when you spell generics, it is all about affordable medicine. And from that perspective, I think no government can really, overlook the demands of this industry in that sense. And from that perspective, I believe, we'll be really agnostic, in fact, regime changes, so to speak. And I do hope that, given the fact that that this particular price regime kind of continues for some time to come.
Good morning, sir. Thanks a lot for joining in. I want to ask you a little bit about the latest acquisition that you did. You purchased the portfolio from Sanofi of established products for about 90 crores or so. Can you tell us how have you funded this acquisition, and also want to understand what the acquisition strategy is for the company, say over the next couple of years? What are you looking at in terms of M&A?
This is really to kind of address white spaces in our overall, geographical presence, so to speak. There are, and we believe that this would be particularly of interest in Europe, so that's why we actually went in for this particular acquisition. Whenever there is actually a strategic gap, so to speak, in our overall portfolio, we've been addressing that with potentially, strategic buy, so to speak. And this policy will continue in the quarters to come also.
So this particular, acquisition that you've made, the sales have not been that great if you map the last couple of years. Any reason for that? And what do you expect could be the sales outlook over the next couple of years?
It's actually a low sales value, as you very well described. As I said, it is actually strategic, and it was available at a particularly attractive price insofar as we are concerned. And that's the reason why we actually went in for this, tactical buy, so to speak.
All right. Mr. Swaminathan, tell us about the trajectory of US sales, the generic sales out there. I'm looking at a couple of sell-side reports, and they're expecting $850 to $900 million in terms of US sales for the coming year. That's for FY25. When does this number hit $1 billion odd? Could that be a target?
Well, thanks for asking this question. So, even whilst we began this year, we talked about, in fact, newer launches that you'd be bringing to the table. So we had Darunavir, and we actually brought in Spiriva, during the course of this year. There's a pretty impressive pipeline actually lined up for the US markets in the quarters to come as well. Over the last several years, we've been focusing on, in fact, kind of pivoting the entire portfolio to more complex drugs, which includes the entire respiratory portfolio. You're looking at, in fact, complex injectables and the like. We would be bringing all of those products into the market. The last couple of quarters have turned out to be pretty good, and going forward, given the kind of pipeline, so we have been, hitting the $200 million mark consistently over the last couple of, and we think that to be sustainable for the immediate future. There's of course, spikes of volatility which could potentially be expected, given the market conditions and the like as well. But in a general sense, if we fast forward, I would expect close to about $300 million coming in from the respiratory portfolio, about $250 odd million coming in from potentially the complex injectables portfolio. There's of course the biosimilars that you'll be bringing to market shortly, in the quarters to come at least. And of course, there is the inline products as well. So for sure, I think over the next few years, we do expect to cross the $1 billion mark. And in fact, if you look at our MTP, fairly confident of, the numbers that you're speaking about in this period.
So sometime in FY26 then, that appears $250 million on a quarterly basis should be gettable.
Well, between the next 3 to 4 years for sure.
3 to 4 years. Okay, $250 run rate. Right now, 200 a quarter. Mr. Swaminathan, you mentioned a couple of, drugs. Just give us some more specifics on Spiriva and, how that's shaping up. And also, this GLP-1s, beg your pardon, I don't know if I'm getting the terminology right, but everyone's talking about this. Apparently, diabetes and obesity, it's a combination, drug, and it seems to be a huge opportunity. Can you help us understand this? How big is it? How big could it be for you? Any numbers?
Yes, semaglutide is, of course, a very big hit in America because, of course, it's a diabetes product which got introduced. But a lot of this actually is being diverted for potentially, for obesity and the like as well. And this, of course, is a big problem in America. But I would imagine that there's indeed a problem in other parts of the globe also, given the fact that, rising consumption, rising life standards and the like, it is, of course, a very live issue. And to that extent, it certainly is going to be a very exciting opportunity for everybody who participates in this.
But any timelines, and what would your roadmap be? Since it's a huge opportunity, just some more color on how Lupin will want to capitalize on it, and when can we expect action on this particular drug through the course of 2024?
No, so we are also focusing on that. We are also working on that. And, I don't want to actually throw numbers and the like, but for sure, it's an opportunity that we would also like to grasp for India and potentially for other parts of the globe as well.
For the next couple of years, what do you think the margin trajectory for the company could look like? You have an exit rate, run rate on margins at about 18% for FY24. You've said that you're on track to do that. But do you have any more margin levers for FY25?
I can hear you. Hope you are able to hear me.
Yes, I'm able to hear you, sir. I was asking you about the margin run rate. I do know that you have an exit rate of 18% for FY24, but what are the margin levers as we move along?
When we actually opened the year, we did speak about the fact that the closing run rate, the margin could be about the 80% mark. We kind of crossed that in the second quarter itself. And we have been promising, in fact, successive quarters, margins would actually rise. I think we are well on course for that, because of the kind of products that we're launching in the American market, and of course the focus on looking at on cost reduction. There's of course, in fact, the sales force that we added to in the last quarter of the previous year. We expect that also to kind of increase in productivity and contribute going forward. So I would expect pretty good, sales in India, sales in America, and for sure, products in Europe like Tyre, of course, which is doing fairly well. And there's of course some laggards, in terms of the Latin American market for us. But we expect that also to kind of work well for us in the days to come, because the factory that is closed in Mexico has been opened up again. So we are pretty confident about the future. There's of course the API story, which is kind of neglected for the last couple of years, given the cephalosporin lack of demand, and of course the pricing of Pen-G and the like. But things are actually stabilizing quite a bit. So I think that's kind of reflected in the overall pharma growth story.
But is there scope to rise beyond that 18%, or do you think that you will be in that range itself, both in FY24 and 25 in terms of margins?
I think there is a lot more scope. If you look at, in fact, the competition, it's well about 22, 23%. So I would like to target about 22% as core. And if there are good products coming up, it would lead to a spike by about 4 to 5 percentage points. So 22, 23 is going to be our immediate target.
Oh, all right. Impressive on that front then.
And when you say immediate, 20 to 23% margins being an immediate target, I mean, are we talking what, FY 25, 26?
That's a target, meaning, yeah, for sure, I'll be working towards that. And, I think you'll come to that position in the next few quarters.
Oh, okay.
Few quarters. Oh, that's
so. No,
interesting.
as in you will set the band and the timeline over the next few quarters, or do you think you can actually hit 20% plus?
We have been, as you can very well see, getting our margins up in the last several quarters.
Yes.
It went up from the first quarter. So last quarter was 18.7. We believe that the increase would sustain in the immediate quarters to come as well. So that sets a base for the next year, and that's a different story.
Okay, all right. Well, I'm sure your shareholders will absolutely love the sound of that. Mr. Swaminathan, thank you very much. It's been a pleasure speaking with you. Great to have you on the show and wish you a good 2024. Need to take a quick break. We'll come back on the other side. And then we get a conversation going with the SBI chairman, Dinesh Kumar Khara. What lies ahead for the banking sector? In particular, a lot of regulatory moves from the Reserve Bank of India over the last couple of weeks. We'll talk about all of that and more in just a bit. Welcome back. Well, the market is actually retaining a lot of that green, 21,600 on the Nifty. It's turning out to be a good morning, and we are outperformers in the world. In Asia, of course, definitely the best performing market this morning. So let's stick with some more corporate conversations, and this is a CNBC-TV18 exclusive. Well, recently, the RBI asked lenders to curtail the credit deposit ratio to 75%. This is one of the many regulatory moves we've seen from the central bank in the last many weeks. To talk about this and more and to get a sense on the business outlook for 2024, we have with us Mr. Dinesh Kumar Khara, Chairman of State Bank of India. Mr. Khara, thank you for joining in. First of all, season's greetings to you and your team at SBI. Wish you a very happy 2024. And we step into the new year with a lot of regulatory action from the central bank. It started, last year with this crackdown on unsecured loans and the increase of risk weights, and now we have this move on the credit deposit ratio. What do you make of it, and how is the impact likely to play out through the system?
Thank you very much, first of all, for having me on your session. Well, of course, my best wishes to you for the season's greeting and also for the 2024 to you and your viewers as well. Well, as far as the regulatory prescriptions which are coming in, the way I read them is essentially to ensure that there should be healthy growth in the system as far as the loan book is concerned. And with that in mind, we had seen that some time back, RBI had come out with the advice relating to the risk weights for the unsecured loans, and similarly the later guidelines in terms of ensuring that the credit deposit ratio should be around 75% or so. So I think this is essentially to ensure that the system should not get overheated. But I would also like to mention that these are the numbers, but they have been very mindful, because when it comes to the unsecured consumer loans also, we have seen that the housing loan, education loan, vehicle loans, and loans secured by gold and gold jewelry, etc., they should be kept out of the purview. So that is a very clear reflection that the Reserve Bank of India is looking for the healthy growth in the system. And I think I read the regulation more in that light.
So, absolutely take your point that the RBI has been very mindful about sectors like housing, etc. But at the same time, risk weights also went up, on loans that are going out to NBFCs. So what has the impact been? Because now it's been some months. What is, let's say, the weighted average increase in borrowing cost for NBFCs? And even on the unsecured side, the personal loan side, what has been State Bank's approach? Is there a bit of a go slow now? Has the cost gone up?
Well, as far as the cost of borrowing for the NBFCs, it has certainly gone up. It has certainly gone up because what we have observed is that for us, the risk-weighted, the impact of the RWA increase for the unsecured loan and for NBFC, it comes to about 70 basis points as far as RWAs are concerned. So there's a capital cost, and generally capital cost is somewhere around about 15%, we reckon it. And when we looked at it, it is adding to, I expect that it will certainly be, for the NBFC, there is an increase in the lending rates to the NBFC. And we have recently also increased our MCLR also, just to take care of this additional impact, and that has gone up by about 5 to 10 basis points. So that is something which you have seen. So I think we expect that that will take care of the increased RWA requirements for NBFCs, etc.
Sir, you mentioned 70 basis points of an increase. I just want to clarify that.
No, 70 basis point is in the RWA consumption.
The RWA, okay. So the increase in cost of funds?
Yeah, increase in cost of fund, which is actually reflected in our MCLR, that has gone up by about 5 basis points.
Okay. Mr. Khara, good morning and thanks for joining in. Just coming back to credit growth, right? It has been very strong both for banks as well as NBFCs in the year gone by. On an average, we've seen credit growth of 20%. But now, because of the tightening of the consumer lending norms by the RBI, do you reckon in the next 1 year, we could see softening or some pressure on credit growth? And what are you looking at for the industry overall, as well as for SBI?
I think I would say that I expect that the industry should be growing at about 14 to 16% kind of a range. And we will perhaps get to see growth in the corporate credit. May not be into the unsecured loans, but maybe we will get to see the growth in corporate credit, which actually means that it will be supporting the real economic activity on the ground as compared to the consumption credit. So I think, to my mind, it actually augurs well as far as the economy is concerned.
Okay, so 14 to 16% growth for the industry is what you're looking at, and largely that will be led by corporate credit. I also want to understand what... Yes,
no,
go ahead,
corporate credit is one of the component, corporate credit, SME credit, and also we will also get to see as far as the real estate mortgage loans are concerned, even they are also witnessing decent growth. So I would say that it will be uniformly distributed amongst various sectors of the economy. This is what my assessment is.
Okay, I want to understand a little bit about retail loan growth as well. What are you seeing in terms of trends? I ask because, there's once again a slowdown that we're seeing in the rural part of the market, especially in places like, say, autos, tractors, for example, because of what's happened with the monsoon situation. So can you just give us an update on how overall retail loan growth is expected to shape up?
In the first half of the current financial year, we had seen the slowdown, but in the second half, we have seen a reasonably decent uptick as far as the rural economy is also concerned. So I think that is what my assessment is, that we will get to see a reasonable growth in the rural economy, even going forward also from now onwards. So that's my assessment.
Hi, Mr. Khara. Nigel on this side, and good to have you on the show, sir. Well, the IBA and bank unions, they have agreed to a 17% wage hike for public sector banks. That will be effective from November 2022 and for a period of close to around 5 years. I think you have provided for around 14%. So you'll have to provide for the remaining 3%. Also, with that sort of a backdrop, will there be a one-time hit, sir, in Q3 numbers?
See, I would not be in a position to comment on my numbers. But yes, of course, what you questioned in terms of, we had provided up to 14%, and we have been doing it from November 22 onwards. And whatever additional provision would be required to be made, that also will be done.
Okay, so the catch-up provision on the book value could have an impact of closer to 2.5%?
Yeah, we will have to look at it, what are the components, because as of now, there is no clarity in terms of how this will really pan out. It's only an MOU which has been entered into. So we have to understand what are the various components, and depending upon that, how will it really show up in our additional provisions. So we will do the working, and then we will be providing for whatever additional provisions are required, we will certainly be taking care of that.
Okay.
Okay. Mr. Khara, recently banks, including SBI, hiked the fixed deposit rates. Now, why is that happening? I mean, is there a lot of competition to raise deposits? And can you just, talk us through that? Because the hikes were not small. They were ranging between 25 basis points or more in some cases, depending on the tenure.
In our case, it was not as much, but yes, of course, we did increase the deposit rates, and that was essentially at the lower end, and it was essentially to smoothen the yield curve, and also to take care of the interest of some of the depositors who are willing to come in for the shorter term. So this was essentially with that in mind.
Okay. Can you give us an outlook on what's happening with asset quality? I mean, in the quarter gone by, of course, SBI's asset quality was very strong. But if we do see some, signs of pressure in the rural market, which has been the case for the last couple of months, do you think the entire industry might see some pressure on asset quality? And for SBI, what are we targeting in terms of gross NPAs by the end of both FY24 and 25?
Well, as far as asset quality is concerned, we don't envisage any kind of a challenges in our asset quality. That trend would be more in line with what we have seen in the past. It may be rather improving upon what we have seen in the past. That's how I would like to say. But as far as 25 is concerned, it is too early to really give some kind of a guidance about the 25. But 24, certainly it looks like to be what we have, the kind of trend which we have seen in the past, in the recent past.
Mr. Khara, post your numbers, we'll quiz you a little bit more in terms of numbers on growth, asset quality, and other pockets. But in the next 12 months, can some of your shareholders look to listing of any of your subsidiaries? Is that an option?
For the time being, perhaps no.
Not in the next 12 months.
Okay. Just one follow-up on the asset quality issue. I take that point that you're not expecting any great pressure in asset quality. But for SBI particularly, I mean, I just wanted to, get your thoughts on this. BGR Energy has been reported as an NPA for your bank in the quarter gone by. The exposure, we understand, a little over 2,000 crores. Are you expecting any kind of recovery from this asset?
This account, actually, they are servicing their obligations pretty well. So I think it's a matter of timing. There was some issue which was there about a year back in their account, and we expect that maybe by the end of this financial year, it should be back on track in terms of the performing result.
Okay, just since we're talking asset quality, sir, I'm going back to that point on unsecured and NBFCs for just a second. For SBI, how big, as a percentage of your book, how big is the unsecured personal loan segment, and how big is the NBFC segment? And is there any reason to be concerned? I mean, the RBI's move also stemmed from concern that there is a need to put some rail guards in the system. How big are these individual segments for you, and how are you watching asset quality there?
I think as far as State Bank of India's unsecured loan book is concerned, it is only extended to those who are maintaining their salary accounts with us, and we get to see we have got a very clear visibility of the salary credit in their account. And I would say that in our case, it is actually perhaps one of the that showed the best of the quality as far as the unsecured loan book is concerned. We don't envisage any challenge as far as this unsecured loan book is concerned. And also, when it comes to the percentage, it would be somewhere around just about, it's about 3 trillion is something which is our retail personal loan book. So it would be about, say about 2 trillion or so, that would be the number. And out of that, if we look at our total book size, which is about 35 trillion, it's a very small component. And on the top of it, it does not have any provisioning requirement even for that matter. So we don't have any challenge in our unsecured book. And I think the RBI's concern relating to unsecured book was essentially pertaining to entities which are offering less than 50,000 rupees loan. And also they were primarily having a focus on the NBFCs and most of the fintech space who were extending NBFCs and fintechs who were extending low value loans, who were, such entities who were not having the appraisal standards or maybe appraisal formats, and also were not having elaborate collection mechanism. So when we started building up our retail book, we invested well in terms of our loan management systems. We invested well in terms of collection mechanism. And on the top of it, the choice of customer, we are very mindful. So we don't have any challenge whatsoever in our unsecured book.
Okay, Mr. Khara, the next big event that everyone's going to be looking forward to is Budget 2024. What's on your wish list?
Well, I think as far as the wish list is concerned, I would not be in a position to say much about that. But yes, of course, there could be, if at all, there could be some incentives for the savings that will perhaps go a long way in terms of building up the capability of the economy. That I believe will be a very positive.
All right. Thanks a lot for that, Mr. Khara. Appreciate your thoughts. In any case, this is going to be a vote on account ahead of the elections, so not too many expectations, in terms of large announcements this time around. So thank you for joining. Thank you for joining us. Hope to speak to you again soon, sir, and have a great 2024 until we meet
Thank you very much. Thank you.
All right. Well, let's move on. That is the biggest banker in the country saying that things are looking good. 14 to 16% credit growth is what they're looking at for the industry, and they don't see any major issues in terms of asset quality. But let's talk about one of the big winners of 2023, which is JK Tyres. The stock gained more than 115% in the last 1 year. The company has steadily gained market share in the last 2 to 3 years, and commodity prices had cooled off. But now commodity prices are coming up once again. Rubber prices have surged. So let's see what the outlook is for 2024. Anuj Kathuria, the president of JK Tyres and Industries, is joining in to talk about that. Anuj, thanks a lot for joining in. Happy New Year to you. If we map the growth of the company in the last many months, despite the growing demand, the overall revenue trajectory is still in single digits. So, Q2 revenue growth was 4%. First half of the year, you barely saw 3% revenue growth. I understand that things in the export market have been tricky, but what's the outlook for the second half? And when do you think the company can return to double-digit growth on the top line?
A very good morning, and wish you a very happy new year to all of you at CNBC. You talked about the top line growth. I would like to say that quarter on quarter for last many quarters, maybe 9 quarters, we have been growing at a rate which is faster than or higher than the industry growth. So our growth has been there, and we have also gained market share across the segments, whether it is in the radial segment or even the passenger car segment. So I see that the growth is there, and the indicators are positive. The macroeconomic indicators are still robust, and we see that there would be growth. The OEM, auto OEM story has also been good. In fact, if you see the calendar year, most of the passenger car OEMs have done the record sales, and for us also it is good news because it has a direct impact on the demand which comes in from the OEMs. Replacement market demand has also been good. In fact, as we speak, the demand is steady, and we expect that quarter 4, which is generally a good quarter for the industry, the demand will be holding up.
Okay. So just 2 numbers. You said market share has been rising steadily. What is the market share right now, both in passenger car radials and in TBR, in the truck bus radial segment? And in terms of the full year growth, what are we looking at? Even if you do say 16,000 crores, that's about a 10% growth in FY24. Is that a reasonable assumption, both on market share as well as on the top line?
See, market share, what I would like to say is that we have been gaining delta share. So there has been an improvement in our share, whether it is in the truck and bus radial or even in the passenger car. We don't specifically talk about the numbers, but I would like to reassure that there has been an improvement over there. On the overall growth, yes, we have been seeing that the growth up to quarter 2 was good, and we expect that the second half of the year is also going to be in line with whatever we had projected earlier. So it will be, if not in double digit, but a high single digit definitely will be there.
Okay, all right. Hi, Mr. Kathuria, and welcome to the show, sir. Nigel on this side. 2-part question, and the 2 driving factors for this big stock price move? One is the improvement on margins, which has been absolutely stellar. And the second factor is debt reduction. Do you expect both these two parameters to improve from year on? If yes, what could debt look like, say, by the end of FY25? Not asking you in the near term because you're in silent period. But by the end of FY25, what could it look like? And margins, is there scope for further improvement from year on?
On the debt reduction, we have been steadily improving the situation, as we all know. There are plans to further deleverage the balance sheet, and we would be working on that. We have already kind of made certain announcements. So there would be a reduction in the long-term debts that we have. On the working capital side, we have been, despite the growth in the top line, the working capital in number of days has been coming down. So overall, I feel that the overall debt would be coming down in the next couple of years, as we had spoken in the past.
So
go ahead, sir.
Yeah, on the margin expansion side, we have been working. We have been working and doing a lot of work on the premiumization side, especially in both in the passenger car radials as well as in the truck bus radials. We have been launching a lot of power SKUs, like in the TBR. Just to give an example, we have launched the Energy Saver, which is being appreciated by all our customers, whether it's in the OE or even in the replacement market. These kind of SKUs actually help us to get a premium over the normal tires. Even in the passenger car, we have been steadily increasing the share of the overall numbers in the higher rim sizes, that is 16-inch and above, and we are making steady progress. So this is likely to continue further for us. This definitely helps us get a better or a richer product mix, which delivers better margins. On the cost side, the efforts are always on. It's a journey, and we would be making further progress, whether it is on the tech-enabled manufacturing or even when we talk about the overall productivity, efficiencies, extraction, the capacity. So that's a journey that is going on. So all these put together.
I'm sorry to come in over there on the margin. You explained all the factors. Possible to get some sort of a numerical range, because the second quarter margin number was absolutely phenomenal, 15%. So on a full year basis, steady state basis, what is the kind of margin improvement that you are likely to target?
See, we have to also keep in mind that we are in an industry where, it is cyclical, and there is a long-term margin that we should expect. So we have been looking at a margin which was in quarter two, definitely we got a 15% margin, and we should be in that range going forward as well.
Okay, all right. So 15% perhaps sustainable going into the future as well. Sir, before we let you go, we must ask you, the next big event, of course, for the country is the budget. And we have a bit of a, budget wish list, that we're compiling for the finance minister. We have a little box here with us, and we have asking people to really put their, wishes out there. So tell us, what is it that you would like the finance minister to perhaps address or focus on?
For us, we would be waiting for kind of, anything which helps drive the demand further up, whether it is the infrastructure projects or it also we can look at any other, the road infrastructure that should continue. We should also be getting a lot of other economic activity because finally for us, if the freight movement that we measure in billion ton kilometers, if that is going to be steady, that is going to be strong, and that has a direct correlation with the GDP growth. So if the overall macroeconomic indicators are going to be strong, I think so for us as an industry, we would be kind of looking forward to such announcements or such initiatives.
All right. We hope your wishes come true. Thanks a lot for joining in, sir, and speaking to CNBC-TV18. Appreciate your time here. Let's slip into a quick break on that note. On the other side of the break, we'll get our focus on the commodity markets. There's been lots happening there, so stay tuned for more.
Welcome back. Well, the best performing market in Asia, actually around the world, given what's happened in the last 24 hours, 100-point move on the Nifty. Let's bring Mitesh back in. Mitesh, I think Anuj called it, right? None of us thought we'll have this kind of a up move. It's sustaining for now. What would your advice be on the index and stocks?
So, I think, I was penciling in 21,480 as the target on the downside for the pullback, and in worst case scenario, 21,200. Yesterday, we got 21,500 and a good bounce back from there. I still am not sure whether we'll start an uptrend, but I think this still looks like a part of the consolidation where we've kind of bounced back from support levels, and the first target on the upside is closer to about 21,690, 700 on the Nifty. And if we get past that, then maybe 21,800. I think that should be it in the short term. So this is still a market which is basically and broadly consolidating, but now maybe, trying the upper leg of the consolidation. Having said that, on the stock side, I have a buy on Muthoot Finance. Disclaimer, it's something which we have recommended to our clients, and I also have positions. So there's vested interest. It's given a breakout above levels of 1,500. So buy here with a stop at 1,490. Look for targets of 1,580 to begin with. And some, the technology names remain on the weaker side. So I have a sell on TCS with a stop at 3,700 for targets of around 3,600.
All right, thanks a lot for that, Mitesh. Have a good one. Let's shift focus to the commodity markets now. Manisha Gupta is here with us. Manisha, what is the one commodity that you're looking at today?
I'm looking at the rubber prices because as the crude prices surge, so does rubber. And we are looking at 1.5-year highs in case of this commodity here. Last year also was a strong year, and we've started this year with nearly 2% of gains already in the first 2 or 3 days of 2024. Well, there are concerns on potential supply disruptions and shortages, and that has been supportive. The major producers haven't had really good weather, and Thailand actually has downgraded its crop for the next year as well, and that really seems to be worrying. If you look at the numbers itself, the world supply was in deficit in 2021 and 21 as well. In 23 as well, we've clocked in nearly 1.9% of a decline. That is the kind of deficit that we saw in the previous year. And the global crop was 14.34 million tons. And if you look at the markets going forward as well, for 24, the estimates are that you are looking at weaker numbers here as well. So what we are looking at is in supply of 15.05 million tons and a demand of 15.52. And that leaves you with a deficit of around 0.47 million tons. That would continue to support the markets going forward as well. Take a look at what the Indian numbers look like, and this is what we've done in the previous year. Production of 8.2 lakh tons and consumption of 12.38. And the last year, we've seen that both the numbers actually kind of increased. Production was slightly higher, but the consumption really picked up much better. And the rest of the deficit that you see in the production and consumption numbers actually was filled in by imports that India had to do. When you look at the prices in the meanwhile, that has continued to be slightly jittery as well. Well, we have seen prices increases in 2019, 20, even 21 was a great year. 22 also you saw the prices gain up to almost 171 rupees a kg. Previous year, the average prices have been at 156. Now, the industry says that we have seen a bottom being made in the previous year. For this year now, it's going to be about 148 to 155, rather 152 to 165 on the higher side that the rubber prices could be trading within.
Okay, Manisha, thanks a lot for that. So, tracking rubber prices over there. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Girish Kumar Kadam of ICRA and Rahul Prithyani of CRISIL Market Intelligence and Analytics to talk about the outlook for the power sector in 2024. Stay tuned.